Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. Okay, so the big picture continues to have a dark blue late September 24 to late March 25 bearish Andrews pitchfork, with prices basing themselves 2 weeks ago on the middle time, currently at 90.72, as well as the 50% Fibonacci line for 2025 at 91.33. The topside had been capped, but the cap was broken last week, with prices pushing up through the combined 38.2% Fibonacci line of the October 20 to May 23 move at 92.56, as well as the mauve medium moving average currently at 93.12, and also by the gold slowly declining long moving average currently 93.16. Despite pushing higher over these, the market still came down to the moving averages yesterday for some fresh ammunition. The market also pushed up and over the first of 3 overhead congestion areas that I've mentioned so many times before. This one was between 91.83 to 91.86 and is the weakest of these congestion areas. But last week and this, we have become clogged down in the next overhead congestion area between 93.95 to 96.06. The final one is between 97.50 to 99.95. We have also gotten stuck by 3 specific nearby congestions. The first is the 50% Fibonacci line of the October 23 to May 24 move at 94.80. The second is, this is an integral part of the 93.95 to 96.06 congestion. The second is the bright red neckline extension, currently at 94.53, of the recent November 24 to February 25 reverse head and shoulders bottom, with finally the third being the green flatlining short medium moving average, currently at 94.85. We're also in the center of a small February-based congestion between 93.50 to 95.50, which only adds to the stickiness. Overall, now that the market has based itself 2 weeks ago on the dark blue middle time, it would seem reasonable to see attempts up to and within this small overhead congestion, maybe even overcoming it. Just bear in mind this is part of a large congestion area overhead, mentioned right at the start of today between 93.95 to 96.06, and may take some time to chew through it. LME 3-month aluminium. I said at the opening 3 weeks ago, and I quote, "Sometimes the technical analysis on a market works really well, and sometimes it seems that it works wonderfully." End of quote. Sorry, no, this is one of those wonderful times, and that's the end of the quote. As I've stated here previously, there are a number of patterns here, one within another, all happening at the same time, all affecting the market. To start with, we have the bright red, shallowly bullish shift pitchfork for the mid-December 23 to late July 24 move. Now, for a while in March, we saw prices starting to establish themselves over the middle time, which is currently at 26.40. But as I said 4 weeks ago, and I quote, "It was a tenuous hold over it, and prices dropped down through it and have remained below, pushing further down. However, this pattern still works at the lower time, currently at 23.31. End of quote. Now, added 3 weeks ago, and I quote, "This is one to keep on this daily chart, as the low of the move has been right on the bright red lower time." Additionally, nearby we have the bright green neckline, currently 23.55 of the October 22 to May 23 head and shoulders top, and the purple neckline, currently at 23.62 of the March to May 23 head and shoulders top. Both these have been pierced, but we have not as yet closed below either. End of quote. Since then, we have seen the bright red lower time punctured but repaired with no closes below it, and it worked pretty well at showing the low of the recent move down. The bright green neckline was breached, but only with 1 close below it, and the purple neckline was breached with 2 closes below, but one of those was barely below. Thus, combined, they eroded the bearish incentive enough to halt the immediate declines, basically in between the bright red lower time below and the pink lower time above, currently at 24.26 of the now breached and possibly repaired longer term November 2015 to April 2020 bullish Andrews pitchfork. Late last week and again today, the market pierced the significant 50% Fibonacci line, December 23 to May 24 move, just above at 24.54. I referenced this 50% Fibonacci line because I did say 5 weeks ago, prior to all the big moves down, that, and I quote, "In truth, I could see any significant move down carrying on till the 50% Fibonacci line of the December 23 to May 24 move at 24.54. End of quote. Now the reason I said this is because prices finally broke down through the previously broken, then repaired, then finally broken, very shallow but quite wide, October 24 to April 25 bear channel, currently 24.37 to 26.61. This, back then, gave a primary target at 23.17 and a secondary hard to achieve target X at 22.10. Now the primary target was reached, but as for the secondary target X, well, as I said 2 weeks ago and ever since, and I quote, "I'm not sure how it will be. I'm not so sure it will be, though it does complement the July 24 low at 22.09.5. I'll leave it on for a little while longer." End of quote. I am contemplating retiring this week or next. So, last week I said that, and I quote, "Right now I'd say the market is contemplating one of two actions. To either treat this as a potential bearish half hesitation move, or do what it did back in July and August last year at approximately the same levels and turn back upwards. I'm watching prices and reactions to the overhead pink lower time and the bright red lower time below, and I'm also on the watch out for any false breaks as well." End of quote. This week we have seen prices move back up over the broken pink lower time, but not make much real progress higher. Indeed, the action since early to mid-April looks like it could be becoming a small rising wedge pattern, which is currently 24.22 to 24.79. This pattern does not favor a move higher or lower, as breakouts occur in both directions, and their breakouts can also be somewhat unreliable. That all being said, I'd keep a close eye on this small pattern in case it becomes indicative of a larger move. LME 3-month lead. I'm continuing to see some interesting moves in this market. The key features here, and some of them in here for a while, all relate to a very large descending triangle, possibly a descending wedge pattern, that's made up from above by the early July 24 to early March 25 purple broken downtrend, currently at 1963, and also, for now, by a bright red breach, possibly broken early August to late December 24 head and shoulders neckline, currently at 1954, though it could also be from below by a dark blue, also breached and also possibly broken neckline extension, currently at 1899, of the July 23 to February 24 head and shoulders continuation pattern. 9 weeks ago, prices broke higher out of this pattern, and 6 weeks ago they broke higher still over the long moving average, currently at 2017. Back then, and again 5 weeks ago, they peaked at or just under the December 2024 high at 2103. In the whole process, the market made a small March-based double top pattern, even Adam type. The market turned lower and achieved both the primary and secondary targets below for this pattern. But the market also continued lower. Now this tied in with something I'd seen in the past few months, the possibility for the action since the start of December last year setting up to make an ascending scallop pattern. I even suggested 4 weeks ago, and I quote, "The market may try down towards the lower levels, but then turn and go for the top side targets." End of quote. Okay, so to recap, we created over March and very early April both a ascending scallop pattern and a double top pattern. Prices additionally have broken down through the bright red neckline and a dark blue neckline. The move higher over the March and early April became a false break higher, and whilst we have since seen a big move lower, I also added 3 weeks ago, and I quote, "I'd like to see some more action down here to confirm that this is also not a false break." End of quote. Well, we didn't see that necessary confirmation, and prices for the last 2.5 weeks have moved back up over the dark blue neckline extension, over the bright red neckline extension, and this week over the purple downtrend extension. This now negates what I had laid out on the downside for the descending triangle pattern of a primary target X4 down at 1812 and a secondary harder to reach target X5 down at 1671. I'll retire these after this commentary. So what have we now that we've made the false break higher and lower? Well, I'm still watching in case we do finally have a proper break in either direction, but I'm not holding my breath over it. Instead, In the near term, I'd keep an eye on the immediate overhead resistances, and these are the 50% Fibonacci line for 2025 at 1971, the mauve medium moving average currently at 1985, the green short medium moving average currently 1992, the congestion at 1994 and between 2001 and 2003, and the long moving average currently at 2017. Above all, and this is very compelling, let me once again make the point, one I've been making all this year and will continue to do so going forward. It has been and still is to me the most important point of all. So, at the end of December last year, we saw that 2024 had created here a very rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year, in this metal in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.